Hey everyone, it's Aaron. Huge news in the real estate world this week. Blackstone has purchased 17,000 single-family homes for $6 billion. This is a huge amount of money to spend for a ton of homes, and they did it all in one fell swoop by acquiring home partners. So they have this entire portfolio of houses now under their control. And this is going to make them, again, one of the largest landlords in America. And the thing is, they've been in this space before. Blackstone is a private equity firm that invests in all sorts of things, companies, private, public, and they have a huge real estate arm. They've purchased warehouses and industrial properties and office space. But they've done this single-family home play before. In the wake of the 2008 financial crisis, right around 2012, they started a company called the Invitation Homes, and they started buying distressed properties. If you guys recall or don't know, a ton of mortgages went underwater. You know, there's a huge crisis that a lot of people lost a lot of money on their home and in the stock market. But that meant real estate took a big hit back then. And there was a recession. And so Blackstone just started purchasing tens of thousands of single family homes at a discount. And they continued that strategy, expanding so much that even as the market started to recover, they started to buy at more market rates just to continue the portfolio's growth. And here's the interesting thing, though, that brings us to today. A few years ago, they divested of all those properties. I mean, Invitation Homes obviously is still public and out there, but Blackstone sold all their shares because they had to return those funds to investors. But they now see an opportunity in real estate, and they're diving into the real estate market, this time not at a discount. They're buying at market rates, and the market's already ripped. In the last year, 12, 14, 15 months, real estate has gone up more than it typically does in a single one-year period. So what is Blackstone communicating by doing this? Well, they obviously see that the market wants to go higher, will continue to go higher in real estate. And so they're making this huge bet. So in this video, I'm going to be showing how they're doing this transaction, but also how they may see the future and why they chose to do this now, even though in the past they typically bought at a discount. So go ahead, smash that like button, and when you do, it shows this video to more people. People like us who want to have better chances at making money in real estate the same way the big money Wall Street guys do. And I think we can extrapolate what Blackstone is doing, use some of those same steps and strategies for ourselves. So hit that like button and let's get started. All right, let's take a look at the Wall Street Journal article. So Blackstone bet $6 billion on buying and renting homes. The deal for Home Partners of America, owner of over 17,000 houses in the U.S., is the latest sign Wall Street believes housing market will stay hot. Again, this is so key because remember, Blackstone purchased a bunch of homes in the wake of the financial crisis at a discount, but now they see it going higher. Blackstone has agreed to buy a company that buys and rents single-family homes in a $6 billion deal. The investment firm confirmed Tuesday that it reached a deal to acquire Home Partners of America, which has 17,000 houses throughout the U.S. Now, Home Partners buys homes, rents them out, and offers its tenants the chance to eventually buy. So that's a unique proposition with them. That's a little different. U.S. home sales soared last year at their fastest pace in 14 years, when low mortgage rates and the rise of remote working during the pandemic sent buyers scrambling to find larger living spaces. And I'll get into it in a moment, but I think this is actually one of the key things that has made Blackstone pull the trigger on buying this many homes at this point in the market. Even after the market has been running, real estate market's been running hot ever since that last recession, and they've divested out of the last batch of homes that they had, but now they're getting back in. And I think the pandemic really showed that the value of a home has increased even more. But we'll dive back into that in a second. Let's continue the article. The lack of homes for sale relative to demand and record housing prices have slowed the pace of home sales in recent months. But on a historical basis, the market remains red hot. One of my favorite Motley Crue songs. And analysts say demand from millennials entering their prime home buying years is expected to fuel demand for years to come. The median price for existing homes has topped $350,000 for the first time, the National Association of Realtors said. The supply-demand imbalance will not be fixed overnight. Catherine McCarthy, global co-head of Blackstone Real Estate. So they're also seeing that the demand for homes has really just made it the supply-demand imbalance is super crazy, as was just mentioned, and the rate of homes being built, it won't be able to take up the demand. That's the bet that they're making, and that's likely what you all are seeing out there, and things that I've heard and seen where people are just making crazy cash offers for homes with no inspection, and someone shows up to an open house and there's already like 45 offers on it. So it's getting pretty crazy out there, and Blackstone found a way to buy a bunch of homes, and they don't have to go piece by piece, door to door and get them. Blackstone was among the big investment firms to buy houses in bulk in the aftermath of the subprime crisis, when lenders sold off foreclosed homes at marked down prices. The New York firm built a portfolio of tens of thousands of single-family homes, then rented them through a company called Invitation Homes. In 2019, Blackstone exited from the single-family rental business when it sold its last shares in Invitation Homes, which had become the largest U.S. firm in this industry with 80,000 homes for lease. The firm put its toe back in the market when they invested in some other stuff with Tricon Real Estate. So they've previously been huge landlords before. They know this game. They know how to do this. So Blackstone's deal for Chicago-based Home Partners shows the investment firm is turning even more bullish on U.S. housing. The firm is rejoining an expanded roster of Wall Street powerhouses that have acquired single-family rental companies. For instance, Canadian property giant Brookfield Asset Management, BAM, recently acquired a stake in a landlord that owns more than 10,000 homes. JP Morgan Asset Management and Rockpoint have also made big investments in single-family rental operations. So the business is attractive to investors because growth can come from both rising home prices and rent increases. The S&P CoreLogic Case-Shiller National Home Price Index, which measures average home prices in major metropolitan areas across the nation, rose 13.2% in the year that ended in March, up from a 12% annual rate the prior month. The rental market showed signs of softness during the pandemic, especially in downtowns that saw an exodus of residents, but lately rents too have begun to rise. So median asking rents rose 1.1% annually in March to $1,463 a month across the country's 50 largest markets, according to Realtor.com. So many analysts say that with home price gains showing a little sign of easing, rents can continue growing throughout the U.S. as would-be homebuyers are priced out of the sales market and are compelled to keep renting. For all the recent activity, big institutional investors own about 300,000 U.S. homes, or only 2% of single-family rental homes, according to a report by New York-based financial firm Amherst Pierpoint Securities. About 85% of the single-family rental market is owned by investors with 10 or fewer properties. I think the concern here is that ratio, while seemingly innocuous, is probably going to start shifting the other way. I think there's going to be a lot more institutional involvement, especially after Blackstone has jumped in. I think Blackstone themselves will continue to make moves, but also other large institutional real estate and investment managers will be diving into the market. And it's going to create, we're already kind of renter nation anyway, but it's going to make it more so that when you rent, you're likely going to be renting from one of these big investment companies, one of these big conglomerates, rather than the guy or the gal who, has like 3 or 4 properties. Now, Home Partners has a unique aspect to them. They're founded in 2012. They have a different business model from Invitation and some other big firms in the single-family rental business. It gives renters the option to buy at a predetermined price at any time with 30 days notice. So this is cool. You can rent to own, basically. Now, to that end, Home Partners limits its acquisition of new homes to homes identified by people as ones they would possibly like to buy after renting. So this is key, I think, for the tenant base that kind of differentiated Home Partners from other properties that Blackstone could have purchased. It's, if the whole portfolio of 17,000 homes, if you go and rent from Home Partners, you could say that hey, we can buy it one day, that's cool, which means you have an intention to stay in the home longer. So what it does is it helps with attracting naturally a demographic that's a less transitory renter or less transient renter, which is going to help them reduce their turnover, which helps them reduce costs on the entire portfolio and which means they're just going to be able to have a better chance at making a lot more money. Ms. McCarthy said about 20% of home partners renters have ended up exercising their options to buy their homes. She said she expects the rate to increase because, given recent home price appreciation, many home partners renters buying today would likely be paying a price below current market value. Blackstone is buying home partners through an investment fund named Blackstone Real Estate. Yeah, fine. Which primarily raises money from small investors and tends to hold assets longer than the firm's opportunistic funds. The strategy is a sign that Blackstone thinks the housing market rally could last many years. Wow. Home partners chose Blackstone's all-cash offer after a competitive bidding process. The deal is expected to close later this year. Wow. So, they had $6 billion they raised from investors and probably their own money that they were able to just pop in there and make this deal happen. Good for them. Super cool, super interesting. But here's some important takeaways. The market, the smartest money, thinks that the housing market will continue to go higher. Obviously, quality of property is important to consider. All right, let's take a look at the portfolio's geography compared to the last time they did this under Invitation Homes. So when they purchased all the homes after the recession in 2008 and 9 under the Invitation Homes brand, you can see it's primarily concentrated in large cities, metropolises, tech hubs, things like that, but also down in Florida and the Southeast, but really not in the Midwest. So, and that's where the bulk of their revenues comes from. Now let's look at the home partners one. Okay, so we don't have a map per se, but let's just look at these metros. So it's Akron, Albuquerque, there's some big cities in here, but there's also, there's more mid-sized cities. And look at their location, a lot of that Southeast action, some West Coast, but there's a lot more Midwest in here, way more Midwest homes in here. And so I think this speaks to an advantage of this portfolio being that the pandemic really pushed people out of big cities. And so people are fleeing to the suburbs or, places with more nature. And then the cities themselves are even seeing rental increases. So they're going to win both ways. Now here's the other amazing thing that is going to result of them buying all these homes. It's much like when a big institutional company, institutional player buys a bunch of stock, it drives the price up. So them buying a ton of homes is going to help maintain the price levels of those homes now, and as they continue to buy, it's going to make sure that those home prices continue to go up. And so when us individuals see those prices, like, oh, well, so-and-so's selling their home, or this home sold for that much, it's going to increase the property values within the portfolio. So the action that they're taking has a virtuous cycle in this current market. And then when the property values of the homes increases, which is one of the aspects they're betting on, there may be an aspect of where they can increase rent, but also when the home's value increases, they can take out leverage on those homes above and beyond what they put down on it. And so that means that they can extract cash out of the portfolio in later years to then buy more properties. And it's basically free money, which is, it's one of those great aspects about real estate, where you can get that price appreciation, extract money out of it via a loan, and then go and buy more properties to increase your cash flow. And finally, there's a great site that I found called Behind the Deals, and they actually did a whole write-up on Blackstone's Invitation Homes strategy. It was published a couple of years ago, but it goes into a lot of really great math and some of the calculations behind why they did their particular strategy. But one thing to highlight, determining Blackstone determining which markets to acquire in. And this comes from Invitation Homes IPO prospectus years ago when they went public. And they look at population growth forecast, employment growth forecast, household formation, how many homes are being built, historical and forecast levels of residential home construction, discounts to replacement costs for single-family residential housing, as in if you sell your home but you have to buy another one, what will that cost you? And if prices are high on both sides of the transaction, will that mean you're less likely to sell? The size of the market, volume of new and existing home sales, potential yields implied by the ratio of market rental rates to single-family home prices. So if the home cost $200,000 and you can rent it for $1,000 a month, so that's $12,000 a year. So that's the ratio that they're talking about: 12,000 versus 200,000. Forecast home price appreciation and forecast rental rate growth. Now, we spoke about the difference in geography from the first time I did this with Invitation Homes and the purchase they just made this week with Home Partners. But all these criteria are still the same criteria that the smartest money is using to buy real estate. And just, the world has changed, and you use this criteria to go say, where are the best deals, where's the most appreciation, the best rental market going to happen. And it's the same criteria, just kind of different geographies now. So we can use these same things in our own work to find real estate investment opportunities to invest, maybe right alongside Blackstone House one day. So a lot of great strategies that we can quickly rip through and learn from Blackstone and their acquisition this week. Let me know what you think is going to happen with the real estate market. Is Blackstone making a mistake by putting in a ton of money now? Is the market at a top? Is there economic recession coming along? Is administrative policies coming out about the mortgages and the home market, or the eviction moratorium? Are all these things going to cause an issue? I actually think, yes to all of those, but more for individuals. Institutional money that is liquid is likely going to be insulated and just be able to buy more homes if the market dips at all. But I want to know what you think, so drop a comment below, hit that like button, get this video out there for more people to see what the big money players in Wall Street are doing, and I'll see you in the next one.